All right. I think we're going to get started here. Wait for a couple minutes just to people log on. All right. Well, hello, Marshall Reddick investors. I'm super excited to be on tonight's webinar with you all. We will be going over a multitude of information discussing Florida's cash flow and appreciation, which is two of my most favorite topics to discuss. It's a pleasure to have with me tonight Jerry Robinson on with me. Jerry's one of our agents in Florida, and he specializes in multifamily investments and also personal investments. But more than less, we will hear from him later on the broadcast. So let's dive right into it. Marshall Reddick Real Estate. So for those of you who are joining me tonight for the first time, and this is your first event with Marshall Reddick, one, I want to thank you for being on, and we welcome you for your attending your first webinar with us. That's super exciting news. But for those that don't know who we are and what we do, we are a full service brokerage. And what that means is we help clients buy and sell investment and personal properties. Two, we also offer property management to all of our investors, not only in California, but across the nation as well. And lastly, we also offer private money lending for not only our clients who are looking to borrow and looking to acquire rental properties, but also offer our investors the opportunity to be the bank and invest in mortgages and trust deeds, which allows the investor a little diversity among their portfolio. But today we're going to focus mostly on the brokerage and a little bit about management as well. And then we're going to talk about how Marshall Reddick helps our clients all over the nation to purchase investment properties and rental properties. So a little bit about me. I'm an advisor here at Marshall Reddick. I'm also an investor and also a realtor in California. So as I mentioned, I started investing in real estate before me joining the team here. I started buying in Tennessee, and then now looking into some of our other markets like Florida and Texas. But my portfolio consists of 8 doors currently holding duplexes, quadplexes, and 2 single families. Some of the markets that we operate in 16 different cities across the globe. The boxes with the green around them, those are some of the ones that we have offices in. So why these markets? Trying to decide where to invest in real estate can be super overwhelming. Well, it doesn't have to feel like you're throwing a dart at the map and seeing where it lands. And although it may be a little easier to assume that the best real estate markets to invest are close to home, that's not always the safest bet. We choose real estate markets based on the latest research and data, such as jobs growth, and job market outlook for the next few years. Another one too is high rent versus price ratios, population growth, landlord friendly. There's a whole multitude, but we've already done the research for you, and these are the markets that we feel pretty strong about and want to sell to our clients. So determining property classes. You want to consider property classes as you start your real estate journey. Typically, you'll have higher appreciation in your luxury and A-class properties, and moving down to the spectrum towards your C and D classes, you'll find more cash flow, lower purchase price, but lower tenant quality. I can say I own properties in each of the spectrum, and although the returns are much higher in your C and D areas, it is a much more of a headache and hassle to manage. I will say finding that balance in between is the best of both worlds. There is nothing better than buying a property that is appreciating much faster than your annual returns in a C and D areas. One last point I will make on this topic is more than half of the time in your C and D areas, the properties hardly ever appreciate. Yeah, you'll cash flow, but most of the time, 5 to 10 years from now, it'll probably stay the same in value. So maintenance and vacancy. In this slide, you'll see a quick snapshot. This is just purely estimates, and each property class is what you'll find for a property for 10 to 15 years approximately. I do want to point out that this is an exception when it comes to new construction. Florida has a ton of new construction, and Jerry will go over more in detail on that later in the slides. So obviously, if you buy a new property, you're going to have a lot less maintenance fees and far less vacancy issues when you're going new construction route. Our property rating ebook, highly recommend you guys check this out. I did want to take a minute and share this topic. This can be found on our website, and we'll dive much deeper into how and why properties are rated the way we are. I highly recommend you guys download it and read it. This is something I wish I had prior to starting real estate. It's definitely a must read for you guys. And next, I want to introduce you guys to Jerry. Jerry has extensive knowledge in investment sales, specializing in multifamily, like I stated previously. Jerry has not only helped me, but also helped numerous clients finding the perfect investment for them. Jerry is an incredible resource to our team. So without further ado, I want to welcome Jerry.
Hey, thanks, Evan. Thanks everybody who came to the webinar tonight, or who will see this in the future. So a little bit about me. I've worked in real estate in Lee County or Southwest Florida since 2009. I started in the apartment industry, managing properties. We had 14 properties, a total of just under 600 doors. Up and down the eastern seaboard for that company. And in 2015, I decided to make the jump over to more of a private investment side of it. So in 2018, I became a real estate instructor here, teaching not only new agents coming into the market, coaching them through this process, but I also held quite a few like buyer seminars and things like that in the area for those that were looking into the investment side. My focus has always been on multifamily or commercial property. It just seems to be a massively growing sector of the real estate market here. So Lee County is where I reside. I've been here since 1997. I've got to see a lot of the growth that's come in through Cape Coral, Fort Myers, and Lehigh. As it stands right now, our population in just this area is about 770,000 residents, primarily that are full-time down here. We do have some snowbirds. You know, people like to get out of the weather, especially during this time of year. In regards to this particular area, or in Lee County, we see about 5,500 new residents or people making Southwest Florida their home each and every year. So I'm going to be talking about a few of these areas today, kind of the bigger areas in Lee County where we see a lot of investment activity, a lot of rental activity. So Cape Coral first. Cape Coral currently has a population of about 199,000 people. Just under 200, according to the most recent census. Of those, about 33% of those homes for those people are rentals in the area. And the last 10 years in this area, we've seen an appreciation of properties, whether it be single family, multifamily, or even some of the larger buildings. The average is about 59% in Cape Coral. Lehigh Acres, little bit different area. The population is still growing out there. They're about 123,000 strong. Again, about 33% of the homes are rentals. The appreciation's been a little bit slower at 46.9, primarily because it's a kind of an up and coming area. And then the other large area that we see a lot of investment activity in is in the Fort Myers metro area, which is going to be Fort Myers, North Fort Myers, East Fort Myers. They kind of made it easy for us, South Fort Myers. But those areas right there, the population makes up the bulk of what we see here, at about 343,000 people. We see quite a bit more, or a little bit more rentals. 36.6% of the homes are rentals. But the appreciation over the last 10 years has been massive through Fort Myers. We're looking at 91% appreciation since 2009. A couple other areas just to note would be the Estero Bonita Springs area, which is going to be on the just past the South Fort Myers line. Population's about 96,000. There's a lot of HOA communities, things like Gateway are out that way, as well as Bonita Bay Group holds a lot of properties in there. It's not as dense from a rental market, although there are some properties in that area that would work. And then Sanibel. So one of the big reasons a lot of people come to Florida, and especially Southwest Florida, is because of the beaches. Sanibel Island is literally an island, and it is completely surrounded by sand. Sanibel Captiva is a very, very high-end or luxury market. The population there obviously is a little bit less. We only have about 7,300 people that live on the island, and you'll see a lot of seasonal in that area. So, but if you ever make it down here, the beaches there are amazing. All right, so one of the big questions I get from a lot of investors is why Southwest Florida versus other places that are out there? Texas, Illinois, New York, California. So water is obviously a big thing. We are literally surrounded by it here. The weather in itself is absolutely ideal most of the year. We see some afternoon showers usually through the rainy season here, but it comes in and goes just as fast. It's always been kind of a joke here that you can be sitting in the house and it's raining in the front yard and sunny in the back. Taxes are also a little bit less here because we don't have a state income tax, and property taxes tend to be lower here than some other high rental market areas. We are a very friendly state to landlords. So our average eviction, in the need that it has to happen, we've been really lucky to not see a whole lot, even through the pandemic, but typically it's 18 to 30 days to go through the eviction process in the event that it would have to happen. In comparison to, I know when I was in the apartment industry, some of the other states that I worked with them with, it could take months to go through a process. So Florida is phenomenal when it comes to helping landlords keep their properties producing income. Job diversity in this area are really our biggest businesses that we see hiring are medical, school district, aviation. There are 3 close airports to this area. There's two in the dead center, and then one that's a little bit further north. IT companies, there are quite a few of those as well. And then, especially over the last 10 years, the residential and commercial construction has been huge here. A lot of builders are just building at an unbelievably rapid rate through everything from single family to upwards to 10 to 16 units. And now we've actually seen a recent rise in some of the larger multifamily areas coming to here to support the amount of people moving to the area. With that, we are the Sunshine State, so tourism has always been a big thing. We slowed down a little bit on tourism during the the pandemic, but it didn't stop everybody from coming. So Florida actually currently ranks as one of the 10 best states for starting a business by the U.S. Chamber of Commerce. So the metropolitan area for Cape Coral is one of the nation's job growth leaders. From people who are beginning their jobs, whatever that may be, or starting a business. Actually, I think on one of the future sides, we're ranked on Forbes as the third fastest growing area for new businesses, new starting businesses. With the population of about 750,000, we do see, on top of that, we got 1.3 million annual visitors that come to this area every single year. Again, it slowed down a little bit, but it's coming right back again. All the vacation rentals are rented up again. So we had the largest spike that we saw was from 2012 to 2016. And it's raised literally every year. I know that according to the census data, Cape Coral in itself, from 2000 to 2020, our population completely doubled. We walked into the year 2000 with about 98,000 people, and now we're sitting at just under 200,000. So definitely a big growth area with a lot of people coming here. All right, so just some numbers so you can kind of see what this metropolitan area looks like. So on average, we have about 35% of the homes are rentals. That means that of the residents that are already built, 35% of them are considered a rental property. Population growth for the area, not just Cape Coral, but for the area, is forecasted at 5.6% annually for the next, at least until 2024. We have a demand of about 5,500 new rentals to hit the market to help facilitate the new movement that's coming to the area. The vacancy rate for single family homes in the area is about 1.6%. This is according to the Cape Coral Economic Office and their reports that we have. So that's single family up to 4 units, duplex, triplex, and quads. Once you break the quad barrier there, it does come up a little bit to 4.7%. And that's all through Lee County. The largest rental income group, meaning the income that is coming into the households right now, ranges anywhere from 35,000 to just under 100,000 a year. And then in looking at it from that standpoint, when you consider 30% of the income going to a rental rate, we look at about rents typically start somewhere right around the $1,250 range on some of the resale duplexes that are in the area, and can exceed $1,875 on the higher end. So one of the things that we focus on here is finding properties where you can get a large rental rate coming from the front end, right? Bring up the potential rent that comes into the home, and properties that still work from a financing side. A little bit more. So the average household size in Lee County is 4 members of the household. The median age for the area is about 48.8 years. It is coming down. I know that may sound like a little bit of a higher number, but in 2000, the median age in Lee County was just under 61 years. I think it was like 60.8 years old. And the fastest growing age range here is at 25 to 34-year-olds. And a lot of those are renters. Fastest decline that we're seeing right now, especially in Cape Coral, and then moving out even to the Fort Myers and Lehigh market, is 65 and older. We see an average annual rental increase on properties, and it could be a little bit higher, a little bit lower, but the average is about 3.7% every single year. Past couple of years, it's been phenomenal, and we see that growth coming through 2021. And then it won't stop, but it may slow down a little bit at that point. Most renters in this area tend to look for 3-bedroom, 2-bath homes, regardless if it's single family or a multifamily setup. 3-bedroom, 2-bath, usually at least one garage is what everybody looks for on a rental. The most requested upgrades that we see in this area, obviously, a garage. Fences are always nice. Florida is great, especially if you have pets or children. A pool, always a positive in a single family home. Gets a little bit harder when you get into the multifamily, but it's definitely an upgrade for those. And like I said, we are primarily pet friendly, and builders have actually taken note of the idea that a lot of renters tend to want to bring pets with them. So the way that they have set up properties now, meaning the open flat spaces in the back for them, all tile floors. These are what we're seeing in the new construction homes, the granite countertops, things like that. It just kind of help with the idea of pets, right? With pets, carpet can be a little bit of a challenge. All right, so why are so many people coming to Southwest Florida? With the increases that we've seen, there is some reason behind why they're coming. So gaining employment here, our unemployment rate is about 2.9% as it stands right now. The ability to obtain a job, so we're the 3rd fastest area for job growth in the nation, which is an awesome honor to have. Medical, construction, teaching, and tourism, again, those are the big driving forces behind our economy. Median income, right, we said 35 to 99, 57 per household is what we see to come in. And then outside of the economic side of it, we have in the area, we have 47 miles worth of Gulf beaches. And in Cape Coral, which is where most of these canals are, there are close to 400 miles of canals that lead out to freshwater, saltwater, and to some of the lake systems that are in the area. We also, for schooling, or those that have families or young families, there are about 119 public and private schools within the Lee County School District. Cape Coral in themselves it feels like it's almost a school on every corner. And you get to choose, right? We're school choice here, obviously a benefit for renters. Looking at the school grading systems and what they have out there, people get to choose where their children go. That also helps from a rental standpoint, because while they may want to rent in a part of town, if it was a school requirement to be at the closest school, it's not like that here. So we're also number 3 in the nation for small business vitality and growth. Everything that it's very easy to start a new business in this area, and I think a lot of people come down here for that change. The idea that we don't have a state income tax and that we have lower property taxes makes this place look ideal. I'm actually working with a couple of clients right now that have left some of the larger metropolitan areas, not because they didn't love the areas, but because it's more cost effective for them to be here. The Lee County area, we are centrally located between some of the major metro areas that most of you will know. Orlando, right? If anybody's ever been to Disney. So we've got Orlando, Tampa, and Miami. We're kind of at the epicenter of all of them. It's about 2.5 hours to Miami, and the same for Orlando. It's a little bit less than that to get to Tampa. So yeah, the biggest, I guess, with Florida's weather being what it is, it's phenomenal. I don't have to scrape snow anymore, so that's great. Economic opportunities that are out there for anybody coming to the area, lower property taxes, and just the sheer amount of entertainment, whether it's local or even going to some of the major theme parks I mean, we've got Disney, Busch Gardens, SeaWorld, Adventure Island, anything you could imagine we pretty much have here, is a big reason what drives the people down here. All right, so cash flow and appreciation in this market, right? It's the meat and potatoes of what we wanted to get to here. So when it comes to investing in Southwest Florida, the best markets, like I said before, are in Cape Coral, Fort Myers, and Lehigh Acres. I do recommend, I know that Evan mentioned it as well, take a look at that property rating ebook. That actually bears a lot on the properties that we search out for our clients, for our investors. But I definitely recommend taking a look at that book, as well as having a conversation with Evan, so he can give you a little bit more specific insight into the areas that we're discussing. Really, it depends on your personal investing style. You know, how you decide to, are you a long-term investor looking at the appreciation of a property? Are you trying to have a monthly passive income through cash flow? Or are you trying to kind of hybrid both of those, so you not only have a plan through your monthly passive, but you build an escape strategy at that point when you decide to get out of investing, retire, and go that way. So there are some big differences between the different areas that we have here. We're going to go through a couple of those now. So in Cape Coral, average properties that we typically see that go for investment properties, especially now, are in the A and B, what we would consider an A and B property rating. And what this means is that the properties typically have a decent appreciation rate, usually between 3 to 5% annually. It is higher in different areas of Cape Coral. The median income of renters is higher in Cape Coral, which allows for an increase in rental rates. And maintenance cost also tends to be lower. A lot of that's because Cape Coral is much younger, right? Cape Coral was started being developed in the late 1960s, early 1970s. So we are not as old as the Fort Myers and Lehigh market, which means that a lot of the properties that we have don't necessarily have the age that some of them may. The lower maintenance cost definitely helps out to help keep that cash flow a little bit higher. But really with Cape Coral, it's a strong long-term investment area. Fort Myers is kind of a mix between the two. So we usually see A to C rated properties. Appreciation rate is actually, while it's been really great over the last 10 years, a big portion of that was in the beginning of the 10 years, and it's kind of slowed down to about 2 to 4% annually as you go. And the further you move south, meaning South Fort Myers area, that number will start to climb a little bit. Fort Myers has a amazing market. It is very hyper local. What that means is that neighborhoods can change quickly, which creates actually a really cool community feel. But one major road can separate two completely different types of property. The rental rates themselves will depend on the location within the city. So East Fort Myers, North Fort Myers tends to have a little bit of a lower rental rate. It's a much different feel in that side. As you get into Fort Myers and then moving into South Fort Myers, it becomes more urban. So it tends to be a little bit more vibrant, a lot of things going on, kind of in a more ideal place to be. And then lastly is Lehigh Acres. So Lehigh Acres has a great opportunity, a couple of great opportunities that are in there. The ratings are a little bit lower there. Primarily, it's just kind of how Lehigh is developing as it stands right now. The appreciation rate tends to be a little bit lower out there. The cash flow with managing your maintenance, the cash flow is potentially much higher out there. So Lehigh Acres is great for somebody who's more of a passive, wants some income, as long as your management company watches that the maintenance that can occur out there. It has a low walkability score out there simply because there's just not a lot that has gone on out there to date. But there is a lot of potential for future growth as a long-term hold. As the other markets like Cape Coral and Fort Myers run out of land space on that side, you'll see people moving more inland towards the Lehigh Acres, which obviously, again, long-term hold. All right, so if you guys are looking for more information regarding the area and what we have out there, and just a little bit more insight onto appreciation over the last 10 to 15 years, types of cash flow, or even some of the different businesses and things that are out in the market now, the website written down at the bottom at marshallreddick.com/Cape Coral, you can actually download this packet, and it's a ton of information that will help you guys kind of get a little bit more and maybe even create some questions that either myself or Evan can answer for you. I think a button get clicked. There we go. All right, so now here comes my favorite part of every presentation. Just kind of discussing some of the properties that are currently active on the market, what's happening on those properties, and what you can kind of expect as a whole shot across the board. So this first property at 901 Andalusia Boulevard, it's in North Cape, 33909 area code. So this is a property that is currently being built. It says built in 2021. It's a 6-bed, 4-bath, which means 3-bedroom, 2-bath on each side. They have a 1-car garage. And because they're sitting there in Andalusia in the North Cape, they actually have a very large driveway area in the front of it. Now, this particular build is probably the most popular build that we have in this area. We've recently, over the last couple of months, seen them start to do 2-car garages with a little bit different face structure. But a property like this is considered an A-class property. This property right here is listed currently at $365,000. We tend to put in an initial repair cost just so if there's any little punch out things or things like that that may need to be done, landscaping, we're able to kind of add that in. Rents on this property sit at about $1,395 as it sits right now. We figure $1,395, $1,400 is what you'll see per side. It gives you a gross rent of $2,790 a month. That means that your monthly income on this particular property, after the expenses, after the management fees and all that fun stuff, you're looking at about $810 a month. The estimated maintenance, vacancy, things like that, those fluctuate a little bit. But even still, after it's all said and done, the profit to be made on a 15-year plan with this property is about $331, a little bit more than $331, or a return of about 18.59% on your money. This is actually a new build. Builder built 3 of these right in a row. This one was built in 2019, and this is what I'm talking about, where they kind of started this feel. It didn't really take off until the recent couple of months. But this is another duplex. It's located in Cape Coral, on the south side of Cape Coral. It's a 3-bedroom, 2-bath. This is nice because it's a 2-car garage. It also, these particular ones right here do have a freshwater canal to the back, or in the back of the property with a seawall. So this property right here is currently listed at $405,850. With the fact that we have tenants already in place on this property, the repair costs we tend to put a little bit higher when there's a tenant in place, just because we're not fully sure if there's anything going on there. But I've actually seen the interior photos of this. It's absolutely perfect. The guy has a couple of great tenants in there. Rents on this one, we put it about $14.95. Just under $3,000 is your gross rent on this property. Considering all of the fixed expenses that come out, we look at about a $587 cash flow coming out of the property. And then at the end of your 15-year, if you're holding it for that or longer, you're looking at a profit of about $315,000. Still, your annual return on your investment is 15%. I love these properties. Very easy to rent. And the way the interiors are kind of built out and laid out, it's all tile floors, granite countertops, stainless steel appliances, screened in lanais in the back. If anybody wants more information on this specific or the listing on it, feel free to give us a call, and I'd be more than happy to talk about it. I think these are perfect when it comes to the rental side here in Cape. And I really think that most of these 2-car garage setups are going to be where we're headed over the next couple of years. So this is another one, and this was kind of the hybrid idea between the last two that I showed you. So this one's on Skyline. It actually just got relisted. It was on for a couple of days and then vanished, and then it came back to us a couple days ago with a new realtor on it. Not one of ours, but a new realtor came onto it. It's a 3-bedroom, 2-bath, same as most of what you'll find here. Remember, most people look for that, or at least 2 with a den. It was built in 2018. And so this one has a 1-car garage on it, but it not only has a seawall, but there's a Gulf access canal that's attached to this property, which pretty much means any fishing or anything you do on there, you can catch some of the fish that you would find even if you're fishing off a pier. May not mean much to you guys, but to those who live here, we love that kind of stuff. So the list price on this property is about $394. Rents are easily $1,500 a month on each side. That's where they currently sit. And there is room for a little bit of an increase on that side. But monthly income after everything's said and done is about $683 a month as passive income. Your profit at the end of 15 years would be looking right around 323. So you got a little bit of a theme going there. At about 16.7% return on investment. This is another one of those properties that is phenomenal. And one of the big things with this is that the city utility expansion is all the assessments are paid. I actually know of another property like this that actually went and sold. It sold at $415. It looks just like this. It's about a block down the road. We got one more coming. There we go. So this is a single-family home in Cape Coral by actually one of our local builders. They're actually in the process of building this home right now. So single-family homes are starting to make a little bit of a comeback in the area over the multifamily. One, cost-effective, it works, and there's still a decent return that comes out of them. So one of the nice things about these single-family homes, through most builders that we have in the area, is the warranties that come with it. Obviously, a warranty is phenomenal, just in regards of keeping your maintenance down when something comes up. And a lot of the builders that I've worked with that have had something small come up, an outlet doesn't work, something like that, they've actually come out and made the repairs for free. So these are all concrete block homes. It's a big thing for in Florida. A lot of people tend to ask me, especially those that aren't in the state, about things like hurricane insurance, which we don't really have a hurricane insurance per se. It's part of your homeowner's policy here. The rates change a little bit in a hurricane, but it's not considered a hurricane policy. So this property right here is a 4-bedroom home. It's got an under truss lanai, which is huge, so it's not exposed to the elements. Stainless steel appliances. Typically, these will have all your walk-in showers and odds and ends that we look at. Tile throughout. Dimensional shingles always makes the roof look nice and pretty. So the list price on this property is $226,900. Rents on this particular property, we're looking about $1,800 a month. So after everything's said and done, we're still looking at a return on a single family home at about 564 with a 15-year profit of about 191,000 on your money, which brings us to just under a 20% ROI. There is a great return on this, even though the passive is again a little bit lower. The end and the appreciation on these properties are huge right now. All right, so now we're actually a property out in Lehigh. So a little bit older. This property was built in 2005. It's a 3-bedroom, 2-bath, right? That's a very similar build regardless of what part of Southwest Florida you're building in. The location of this one is centrally located between near two main intersections to either get to Fort Myers or to make it to 75 and head out to the Naples area. So these, as it sits, we expect about $1,100 in rent with a list price of about $275. So you can see that the purchase price of properties in Lehigh tend to be a little bit less, but the rents are also down a little bit as well. Cash flow, remember Lehigh is a big cash flow area or passive income area. After the fixed expenses of the property, you're looking at about $675 coming in monthly, with a 15-year projected profit of about $152,000. The ROI is a little bit less, and a lot of that just has to do, the appreciation tends to be a little bit lower in Lehigh, just because it's an up-and-coming area. Longer holds may produce a little bit more benefit. All right, so I always want to add a nice multifamily property. These things are becoming more and more popular, just because having more units under the same roof tends to be a little bit more cost effective. The more doors you have, the less per unit you tend to look at. So this is considered an A-class property. It's an older property, so it was built in 1979. Every unit is half the units, excuse me, are 2-2s with a couple of 1-1s in there, which there's always a need for 1-bedroom, 1-bath. So there's very few that get put out anymore. But this does work as a income property. So as a list price of about $830,000, gross rents on that are about $7,300, which is actually huge for an older property like this. So after everything is said and done, the fixed monthly expenses go in, the income on this particular property is about just under $2,400 a month, right? More doors, makes sense that we would make a little bit more monthly out of that. Your profit on a property like this runs in at about $736,000 at the end of 15 years. The ROI, about 14%. So this is another one of those where if you're looking to get a bunch of doors all together in a cost-effective way, this is a great way to do it. And with the appreciation, obviously, it grows with time. Just to kind of mention, there's some newer, much newer multifamilies that are actually currently being built right now. For the newer multifamilies that are out there right now, meaning more than 4 doors, you're usually looking at about 180 a door. So you can see, I mean, 10 units at that point would be 1.8 million. All right, so big difference. But this is definitely a great cash flow property. All right, so that is all my properties. Just to kind of reiterate what we look at from a there we go, for property management. So I work in the local office here, and while we all kind of have our own little roles, I focus a lot on the sales side, right? Helping my clients get the best property that they can get. We have a full staffed management team, which includes our owner coordinator in this market, and I think it's actually the same way through all of our markets. But in our market, we have our owner coordinator who is there to kind of talk you guys through everything that's going on in the property. When things come up, they're there to handle anything. We have a full leasing team whose pretty much only role at that point is to make sure that your property is rented up quickly. And then our maintenance team is divided between a couple of people where they handle all of the production or turn of your property when a tenant vacates. Remember, the faster we can get that property ready for another renter in the event that someone vacates, the faster we can get another tenant in play. So we do everything when it comes to the management side. That means that we are pulling together all of the estimates for anything that needs to be repaired on the property. We do that as quickly as possible. If the property is not rented, you're not making money. So we want to make sure we do that for you. We run through rental analysis, not only when you purchase a property, but every year when we're looking at renewals, right? We want to make sure that you're getting the best bang for your buck. So if there is a large increase in what the rental should be, we work through that not only with you and kind of play out that side, but also with the tenants. We advertise and show the property. Big advertisement right now, obviously, is through the MLS, which actually syndicates to almost every major outlet that's out there. So we take professional photos of the property. We make sure it's nice and clean and it shows well. We set it up when other people we're a transaction state. So when other realtors come to us and say, hey, I have this client, I need to find a home for them, we work through all of that. We will find and screen the applicants. Right, so we have a set standard when we're screening our applicants, and all of our people have to meet that requirement in order to be approved for one of our properties. We go through the lease signing and all the paperwork that would be required if we are placing a tenant in play. We do all of the rent collection on the property. They bring their rent to us or pay online, multiple ways to pay, but they bring everything to us. And then we make sure that we pay it out to you guys as it comes in. We do provide monthly and year-end statements for tax purposes. So the monthly statements kind of tell you if there were repairs on the property or if there was anything that needed to be done, or if a tenant paid extra, whatever the case may be. And then at the end of the year, we were actually able to provide you with a full year-end statement that you can walk in to do your taxes and go, here you go, everything's good. We also conduct periodic inspections. The purpose of the inspections are really to make sure that the tenants that are in there are taking care of your investment. It's also a big benefit to do those inspections because in the event that there's some things that need to be corrected, it's always much easier for us to get the tenant to have those minor repairs taken care of before trying to chase them after they've already vacated the property, right? So we are a full stop shop. We do pretty much everything on that side of it for our clients, and they help to keep me honest because we're able to maintain that relationship any properties that I bring to you, I'm still with the company. I still deal with the property managers on a regular basis. So I don't want to make them mad at me either. So yeah, and with that, I am going to bring you back to Evan. Are you there?
I'm here. Thank you. Thanks, Jerry. That was incredible information. I appreciate you taking the time to go over all the nitty gritty. So I'm sure a lot of you are wondering what my role entails here for being an advisor. And so I mentioned that I'm an advisor here over at Marshall Reddick. For those of you who are joining us for the first time, you may be thinking, what does that mean to me? Why is it important? Well, as an advisor, I work with my clients to help understand your goals for real estate investing and help put together a roadmap so that we can get from the goal to the accomplishment and continue to help grow that portfolio. There's a lot of things that go into that, such as who, what, where, when, why, and how. So we'll put a plan together in motion and connect you with a lender, and ultimately get you connected with Jerry, who will write up the offer, get you that property, and connect you over to the property management team and give you the full rental analysis and all that details. But more or less, make sure that everything operates like a well-oiled machine. Everybody has different goals and different roadmap, and that is why I'm an advisor, and it's for to help you get to that first step. So I'll be reaching out to you from after the meeting and going into to figure out how we could start your roadmap and get you guys to at least buy your first one, or maybe perhaps your second or third. We look at this as a business relationship. We don't want to be the one and done. We want you to be happy and continue to keep buying more, because once you buy your first one, it becomes addicting. You want another one and another one and another one. So we want to make sure that you are provided with all the details and everything like that. So if you guys have any questions and want to schedule just a one-on-one call, again, my name is Evan. I'm a real estate investor here and an advisor, and also a realtor in California. So if you have any questions, my number is down below, and my email is there as well. Again, we thank you for attending this webinar, and we hope to see you on the next one. Thanks so much, everyone. Take care.